Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video, I'd like to follow up on a trade setup that we were looking at in our MTPredictor customer training webinar yesterday, which was Wednesday the 20th. What I was looking at was this particular high here. You see here the 20th starts, and we're looking at this particular high here. This was actually a VSA setup. And I want to look at this in a bit more detail because these trade setups are very, very good indeed. So this is, if we look at the volume, if I make this a little bit bigger so you can see the thickness, I'll zoom in a bit. What we're looking for, in fact actually no, I'll go back a bit because I want to just show you the how this is set up. You can see here I have the high, low and close lines set on for the previous day, which was the 19th. Now the line that I was interested in particularly is this blue line here, because this was from the high of the day before, which was the 19th. And you can see that the market made a couple of attempts at that on the 19th. So this was a very obvious standard technical analysis level. In other words, all traders in the world would have been seeing this 14.023 level here as an important level. So what happens when the market on this particular bar here, which was our 1018, broke up beyond this high here? You can see we have our VSA bar highlighted in the volume here as being this red bar here. So this tells us that something else is going on. So normally what happens is when a market breaks above an important high, amateur traders say, oh wow, great, let's go long, let's buy. However, what we know is that professionals, they use this as what we call a fake out. In other words, they look to sell into the amateur buying as it goes beyond these levels. Now how can we tell that? Well, we normally look to the bar after the bar that's broken the important high or low. So that was this bar here, which was 10:21 New York time. Now if this bar fails to continue to fails to carry on up, or gives us a red sell bar in this case, it's an indication that the market is stalling, and actually this high volume on the prior bar, which was on the 1018, was actually professional selling and not buying. We also have another tool at MTPredictor, which is our decision point tool. So here I'll go back to this last major high and I'll put our decision point on, and you can see that that was giving a resistance area just above the high level. So what we look for is we look for a strong move beyond a prior high or low, which is what we got at 1018, right up into the decision point resistance, which is on our chart in advance. Again, this is a leading indicator in MTPredictor. We then look for the next bar, which in this case was 1021, to then give us a coloured MTPredictor colour reversal bar. So this set the trade up as a potential short trade coming in here. Our target would have been our DP off our prior swing low, which was here. So there was our target. So if I set this trade up with our risk reward, it would be going short just under the low of that bar, protective stop just above the high of that bar, with initial target at approximately this decision point level here. Remember, we use correct position sizing to then vary our number of lots or shares or contracts to keep our initial risk small under control. So this would have come in with a potential 1R initial risk. And as we can see, if I scroll out, the market went down, hit our first target there, where potential profit of 5.5R, in other words 5.5 times the initial risk, was available. Now what I said in the webinar was, because when we hit this level here the STF was strong, which is our grey band down here, I suggested the market had further to go to the downside, therefore to use the ATR stop to trail it, which is our red dots. So that would have taken the trade down to approximately this level here, and you would have resulted in an approximately 6R profit. So in other words, the profit at approximately $2,300 would be approximately 6 times the initial risk of 385. So a very, very good trade there. And these are the kind of trades that we like. These VSA setups, because they get you in the direction of the professional traders, are normally very good trade setups indeed. But was there anything else you could have done as an advanced MTPredictor trader? Well, as the market was coming down to this low here, which is 1142, if I put the Elliott wave analysis on, you can see that it was at a WPT support zone. But this isn't normally an area where we'd expect the market to reverse. However, if you're following all the markets, in other words, this is what we like you to do, let's go and have a look at the ES at this time, which was coming in here at 1042 at this low, and let's see what the Elliott wave pattern was on the ES. Now the ES is the boss. This is the one that normally sort of leads the other markets, and it's one that to really look at. So if I put the Elliott wave intermediate on, can you see now how the ES made a 1, 2, 3, 4, 5 with the low right at the typical wave 5 WPT. This indicated this particular decline down here was very likely at an end as of the 1042 bar. So if you were on the YM, and there's your 1042 bar there, you could have said, right, okay, now I want to protect my short trade a little bit more aggressively, and I'll just trail at the bar highs. In other words, you'd have been stopped out just above that bar high, so that would have increased your profit to nearer $2,800. Again, all for initial risk of $385. We can see here the profit would have been approximately 7.4, or can we call it 7.5? Let's call it 7.4, 7.4R. So in other words, the profit was approximately 7.4 times greater than the initial risk. So this would have been a very, very good trade indeed. But do you see how all the items were coming together to tell us that that was an area where the market was going to make a reversal? It also was a great VSA setup, as indicated by our red bar there. We had everything coming together. The market then declined down nicely into our first target. We then assumed that it was going to go a bit further because of our strength band on our STF. But once it got down to this level, the pattern on the ES was suggesting that that particular swing, or that leg of the swing, was potentially nearing an end. Therefore, you could have started to aggressively manage your trade by bringing your stop just that little bit closer, and as such locked in a very, very nice profit. So that just shows you how to use the tools in MTPredictor to uncover some great manual trades. If I look at the 15-minute chart, you also remember, if I just clear that off, what I was talking about in the webinar was this particular high here, which is what we were looking at, was also a 15-minute resistance. So it's also an indication that the market was at a major resistance. Therefore, this was a good trade to take as well. Now, I know this has only allowed you to take some profit out of this first leg down, and the market did basically chop sideways for a while before then going sharply lower into the close. Were there any other trade setups that would allow you to actually take advantage as the market declined later in the day? Well, there was, and it was on the NQ. If I go to the NQ, clear everything off, you can see that there was a lovely TS2 sell setup that had you short as the market started to decline later in the day. So that was a very nice trade setup on the NQ. STF was red, so that was a standard trade setup that all standard MTPredictor users would have been considering. But this video really is to look at this particular trade setup here on this VSA setup coming in, which would have basically had you short from the very high of the day, and then taking a very nice plus 7.4R profit out of the first leg down there at the beginning of the day. So a good example of a MTPredictor VSA trade setup, particularly as we were talking about it in yesterday's training webinar as well.